All right, hey guys, how's everyone doing? This is Hala Pablo. Thank you for tuning in. Real brief update on Bitcoin. What's going on? Let's just do let's do an evaluation. We got both charts here: the 2021 subcycle B and the 2025. We're gonna assume it's A. Hopefully the dual cycle from the year 2021, 4 years ago. The tops are juxtaposed, meaning that the 2025, this where we are now, this diamond that's in the process of distributing, that will maybe retrace a little bit more. We're going to determine where the retracements could come in the Fibonacci, and then hopefully there we'll find a bottom and begin accumulating, reabsorbing, and in preparation of putting up a markup, a whole new markup, and creating a second all-time high maybe later on this year. But we don't know that for sure. There's no indicator that can give us that kind of data. So we're gonna continue to go off of historical price action algorithmically off these two charts the way we have been going off since the second week of December. We followed these charts. If you've been following this channel in these Bitcoin updates, then you would have seen that this is played out almost cookie cutter. These two tops, I mean, they're so similar, it's uncanny, isn't it? And the waves are just, I mean, they differ in relation to scope and intensity because every year is different as far as market sentiment and the dynamics of FUD and FOMO, fear and greed. But overall, what I want to convey is the bare bones, the skeletal framework of the distribution schematics are always the same. Those haven't changed. They've been like that since Richard Wyckoff began tracking these things back in the 20s and the 1920s. They haven't changed. And what's more is the cycles haven't changed either. If you noticed, about every 4 years, the cycle repeats itself. We find that in reality. We see that in the seasons, winter, spring, summer, and fall, and then it recycles again. We see that in the tides, low tide, high tide. We see that in the lunar cycles, the waxing and the waning of the moon. We see it in life cycles, birth, middle age, old age. And so we see it also in price action. There's a winter, there's a spring, a summer, and a fall. Now, the seasons are there, but the scope of the seasons aren't always the same, right? Sometimes we have severe winters, and in other years we have mild winters, but there's always a winter. And the same thing with summers. We have Indian summers and different. We have late springs, early springs, things like that. The same thing with price action. The waves, the waves are there, like the winter, spring, summer, and fall are there, but the extent, the scope of the waves differ from cycle to cycle, season to season. So if we begin adopting that kind of mindset, looking at price action, you'll find it opens up a whole new vista of understanding how these waves work. We see that they go in an impulse of 1 through 5, and then they have an ABC correction, and then it starts over again. That cycle starts over. That's the Elliott wave cycle. We see that also in Wyckoff. We see the accumulation, we see a reaccumulation, sometimes another reaccumulation, and then we see a distribution, a redistribution, and then the accumulation begins all over again. And we see that in all time frames and all fractal formats. And so that's the beautiful thing about price action. So, okay, enough said about that. So we go into, so here's the 2021B and the 2025, 4 years. 4 years. So it's like winter, spring, summer, fall, 4 seasons, 4 years. Every 4 years, you see the cycles repeat to a certain extent. And so we went back 4 years to this, and we see great similarity. Now, I want to keep this video nice and brief. So we're just going to talk about this regression trend here and compare both of them. As you see here now, as in 2021B, we're right here at this micro support line at this area here where we have looks like these 3 shooting stars up on top. These were short squeezes, I think. These were like liquidity grabs up on top, and we've seen the kind of the same thing. If we draw a line over to where we are today, we see these attempts also at the macro trend resistance line at the top of these regression trends. And so this, of course, was the meeting that we just had with, the Trump Bitcoin Strategic Reserve meetings. And really, I didn't see much attempts at all after that. Really, I was expecting more. I was expecting false rallies to kind of come up and challenge this anchored VWAP ice barrier here. But like we saw 4 years earlier, it didn't quite reach up to the ice, up to the anchored VWAP, but we did have the attempts, which is seen in these long upper wicks, or kind of like shooting stars, that just penetrated this micros resistance line, kind of in the sweet spot here, and then it retraced back into the trend. Right before we broke this micro trend resistance, you see this diagonal micro trend line here. We had a period of linear consolidation, a little tiny period of linear consolidation. We see that here in this flat line, this kind of flat candle line here, where the bulls and the bears look like they're both at like an impasse. And then we had the break. We had the breakdown, or the markdown through it, and we had it on rising supply, as you see here. So we know that this break here was totally legit, and it was going down to the bottom of the ocean. And the same way here now, if we look at today's, here's that flat line. You see it showing up now? I'm telling you, price repeats itself in algorithmic format. Not always the same, to certain degrees of deviation, but it's there at the 4-year mark, at the 4-year cycle mark. And you can go back and test this theory on coins that you like, on your favorite altcoins and such, and on stocks, anything that's tradable in the markets, whether it be a stock, a commodity, an index fund, or anything. Every 4 years, you'll see the cycles beginning to replicate themselves. And so you see this here? Yeah, the similarity. And then right after we reach the end, I mean, I haven't counted the candles, but there may even be the same symmetry as far as the Japanese candle count. Maybe the same even. I haven't done that. I don't get that much in depth, because it's not always cookie cutter. Like, there's always little like differences and degrees of deviation. So again, you want to look at the macro. You want to get a macro view of it. Like, we get a macro view of the 4 seasons, right? We don't measure the days of, like, the solstice and the equinox. We don't try to get into numerology or anything like that. We're standing back, as it were. We're getting to a higher time frame, and we're looking at the macro winter, the macro summer, and such. So we're looking at this macro pattern here, and then we see right where it was supposed to break, like it braked 4 years earlier. We see that here, and then we go into the vertical bar volume, and we see confirmation in supply. So this legitimizes the break here, this rising supply. And so, taking all that into consideration, now we could do a Fibonacci retracement, and kind of get a general idea of how far this thing can break down, and we can measure this retracement here. Now remember, this was subcycle B, so I think we're going to get this retracement. I think this is the 1272 here, this trading range. We can count on that if we go up the bottom. If we go up this one wave of this double bottom within this regression trend and take it up to the highest attempt, and draw our retracement from there, we get what are we getting? We're getting around the 2, right? So where does this come down? The 1272 is the top, the 2 between the 618 and the 2. I think we measured this before, and if we do the same thing, so that happened 4 years ago. If we do the same thing this year, we'll go up the bottom of this lowest point that broke the bottom of the regression trend, and come up to the highest point of the of that first kind of upper wick area, and then we get the 618 and the 1. I don't think it's going to go down that low, actually. I'm thinking we're going to go between the 1 and the 1.272, so between maybe 74, and then we could hit 69. So something between 74 and 69. Let's talk like 70 G's, I think. short term, we could see this retracing too. If it makes an attempt to go back up through the ice, it may do that, although we didn't see any attempts in 2021 of coming back through the ice. We just saw the break, and from there it was down, and this is on the 3 hour, just like this one. So yeah, we could see this going down. We're at 83.5 now. We could see this going into the mid 70s, 75, before we begin to see preliminary supply begin to come in, or rather not supply, but support, fresh demand coming in, putting the brakes on this markdown, as it were. We could certainly see that. We go and we pull like a VSA, we see the VSA really isn't telling us anything different than what we looked at on the macro. Yeah, we have this micro trend resistance, and then we had this break after this linear consolidation. We had a break, and then we have the clear increase in vertical bar volume. And so let's go down to the 30 minute. So this is on the 30 minute now. We can kind of get more of a forensic. What we want to look for is shooting stars on the top around resistance area, shooting stars, long upper wicks, and we want to see like maybe hammers on the bottom, hammer-like structures in the candles, which would denote long lower shadows. And so that's all of that is a deliberate effort by market makers to keep the price action within the governance of this geometric pattern before they either pump it or dump it from there. And of course, in the interim of this trending, we see attempts. We see liquidity rates on both sides, on for shorts and longs, taking out shorts and longs, because they're both, market makers, like I talked about. It's not just commercial interest against retail. It's they also fight amongst themselves. They contend and vie amongst themselves and try to fake each other out. The whales fight amongst themselves. It's whoever gets the most liquidity, whoever sweeps the most liquidity in the end wins the game. It's not about pumping Bitcoin to $1 million, and it's not about dumping it to $10,000. It's about momentum plays and trying to outfox the other and grab the liquidity before they either do what their opponent was anticipating, the opposite of. So if everyone's anticipating going down, a markdown, they're going to obviously do a short squeeze before that, and they're going to go as high as they can go to wipe out all, to hunt all the stops, and then they do it the opposite way too. So that's what this is, and we see it's meticulously engineered. We look at the price action on the top, and we see whenever the price action is hitting the resistance line, we're seeing large supply coming in and bringing it back down. And then likewise, when the price action hits the support line, we're seeing demand, just enough demand to keep it within the confines or within the governance of this symmetrical triangle. And so yeah, even sometimes you may even see the overall bias that we've already determined is going to be bullish. Bearish for this. So why is it sometimes we see what appears to be a dominance in demand if we're bearish? And so the dominance in demand could be seen as a weakness, especially every time you see like a large candle like this, or like a large like a demand bar. We look up at the corresponding price action and see what's happening. Like this one, for example, we see this is a lot of effort, but this is very small results. So that's weakness of the bulls. That's buying pressure weakness. And then the same thing here. This one sticks up out of all these other supply and demand bars. And then again, we see just this meager little result from this average effort, and the same. Now we look also in the bearish power now, and then we see like immediately after the bulls do something, we see the corresponding supply coming in, and the supply usually isn't even half as aggressive as the demand, and yet it's able to engulf the demand immediately and bring it back within the governance of support and resistance of these symmetrical patterns again. So so again, it's not about the intensity or the breadth of the candles, but where it's occurring, and then the result in the corresponding price action. And so you can learn how to do all that. Subscribe if you haven't subscribed. You get more technical analysis like this. You can talk to anyone who's been subscribed to my channel or in my Discord group, and they'll tell you that we've been following this. We've basically been calling the market since basically Trump got elected president. We had that 3 drive in the beginning. Everyone was calling. I say everyone, not everyone, but many analysts. I don't really look at other analysts, but like from what I've heard from people sending me tweets and everything in our private Discord group, many professional analysts saying that this was going to go up to 120,000, 130,000, 200,000, and it just became like a mantra. But had they understood cyclical algorithmic price action from 4 years prior, they'll see that this is playing out pretty much tit for tat as a diamond distribution, and it probably would have affected their sentiment. So if we've been calling this thing since mid-November in this 3 drive, and so one of my prerogatives in creating this channel is to keep everyone safe from the knowledge that I've gleaned over the years of trading this, thousands and thousands of hours of studying charts through Wyckoff, volume spread analysis and such. And I take great delight sharing knowledge and teaching you how to fish and how to do this for yourself, so you don't fall prey to a lot of the scam signal groups that are out there through various platforms. So I just want to keep you safe. I don't need sponsors or anything like that, so I don't have any ulterior motives. I don't have a course to sell you. I don't have coins to shill. This is my own technical analysis, and I put my money where my mouth is. I just share trades and swing trades, especially when altcoin season ramps up again. Every altcoin chart that I put up is my own trade, is where I put my money. You're welcome to piggyback it. So I don't usually share them on Facebook. You kind of have to join the private Discord for that, but I keep it extremely affordable, and you can speak to anyone who's been in it for any length of time, and they'll be able to vouch for the veracity of the charts. And there are many traders in there also with experience. They bounce ideas off each other. It's just a really great community. Check it out if you're serious about making serious money. And that's all I've got right now for this. We're gonna just watch this thing play out, and if anything else comes up that I think is noteworthy or worthy of your attention, I'll go ahead and share it on YouTube if I get the time. Otherwise, all my charts and all my discourse is within Discord. So check it out. You owe it to yourself if you're serious about crypto. All right, I'm gonna go. Talk to you guys later. Thanks again for subscribing. Nothing that you've heard is financial advice, but you already knew that. May God bless each and every one of you. I mean that sincerely. And I look forward to hearing from you in chat or in the comments. All right. Adios, guys. Bye-bye.